So if you are thinking that you're going to make generational wealth by trading, sitting in your bedroom in your shorts and using your savings. I started an investor, and not just any other investor, but I started with the arrogance that I think I could beat the market. There's some element of greed, but it's not just greed. There's also greed plus curiosity that, hey, can I crack this product, and will cracking that make me money? There is no one textbook that you could kind of go through and finish those 10 chapters and call yourself, okay, I think I have understood it.
Trading is probably the worst place to do that. What is stopping me from copying your logic and trading the same thing?
Rules is just a very small part of it. You need to know what you want to ask. You can't just dump something and then leave it blank.
Give me millions.
Yeah, give me millions. That's not going to work. I always was a very rational, rules-based kind of a person. I continue to be, and that's why my focus on systematic trading. But over years, I've realized that some of the biggest guys who make money, they're not 100% rules-based. The base with which someone starts today is very different from the base with which someone started 20 years back, which is fine. Human greed has not changed. I think the 20-year-old today, the Gen Z today who is looking at markets is as greedy as I was when I was in my 20s. You can't really sit back and say, okay, I think I've got a sense of it. So you would have to do it, and then you get a different dimension of learning, and then you kind of repeat that cycle of reading and doing.
Hi folks, this is Krishna here. The reason why I'm here today on this channel is In the Money just completed 1 year. So we thought instead of Sandeep talking about all the strategies, all the recommendations, all those things, I'll sit down with him and just ask, how's the journey been? You've been doing this for 20 years or so, trading the markets, but this time you're on the other side of it, as in you're now helping people learn about it. How's the journey been like?
Thanks, Krishna. Thanks for having me. It's been a lovely 1 year. Talking about how's been this journey, well, there's a side of me which you're not aware of, even when we were talking before the shoot. So I spent a small part of my life teaching at a university, okay? And as a part of my doctoral program, and then I dropped out of that doctoral program. So there's a lot of my content work is similar to the research work which I would do, which means, you try to figure out things and then present it. There you're talking to a close group of students. The format has changed a bit. So in a sense, I'm teaching on screen, I'm talking on screen, and it goes to a large number of people. But other than that, a large part of it is not something which I am, which is new to me or I'm unfamiliar with.
Right.
So in that sense, this is a different kind of a homecoming. So not something very new.
Right.
So, and also get to meet lovely people every other time I visit the office and interact with people. So all in all, it's been great.
How did you get into this? How did you get into trading?
Okay. So at some point in time after, my during my career I had some savings, and I had put those savings in a bunch of stocks. And
this is how long?
I'm talking about 2005 onwards. Okay, so somewhere between 2005 to the crash of 2008, I had put my money in a bunch of stocks because some friend asks you to put in something. So randomly, I had no sense of what is what, but I had some money there. But not much, because when you're young, you're not earning much. So, but still it was there. And
but young, still substantial at that point.
Yeah, still substantial. Savings were pretty high at that time compared to what I see right now. Still, I did not have much. So whatever I lost as a part of the 2008 crisis wasn't much. So, but then it was only post-crisis that I got a bit serious about investing. And again, I started investing from 2008, 2009 onwards, again into stocks. I mean, I somehow had this feeling that I could
So you started as an investor.
Yeah, I started an investor, and not just any other investor, but I started with the arrogance that I think I could beat the market. Okay, I'm smarter than the rest. So, but obviously, market teaches you something, and over time I realized that it took a while. I mean, I would say if I got started with markets in 2002, it took 6 to 7 years for me to realize what does even beating the market means and what is an alpha. All of those things did not make sense to me. Conceptually, I may have been aware of it, but to really internalize it, it took a long time. So, but once I internalized it, I realized that this is not working. Then slowly it takes time for you to kind of give up on it. All of that was happening. And this was around this time I got introduced to the whole idea of derivatives.
This is 2000?
Yeah, I'm talking about now, reinvesting started in 2008, 2009. So by 11, 12, derivatives happened.
Okay.
So
roughly,
that's when
roughly 14 years.
yeah.
Roughly.
So that's when I realized, okay, this is an interesting product. What do you do with it? What are futures? What is options and all that? You start discovering. And that's when, I got introduced to trading. I would not say I knew anything, but I just figured out that I could do something with these products, which are derivatives. And that's where it started.
2011-12 is when you made your first trade.
Correct. And this is where Deepak, Deepak Shenoy, who's been on our show. So he used to write a blog, and he was one of those first people in the country to write about options.
So he got you interested in
derivatives. I would not say he got me interested, but he was one of those few people who were writing about this topic. If you go to the internet and look for someone who's writing about options in an Indian context, I don't know if there was anyone else who was writing about it. It was Deepak who was
I think Nitin also has the similar story that, when he started writing on Orkut and all those things, Deepak used to be like the big guy there in the whole community and all those things. Let me ask you this. Was it hard to understand that derivatives back then? Like, what was the lure behind going into it? Like trading derivatives or...
So first is, there's some kind of a greed, which is underlying greed, okay, which is a good part. I mean, I'm a bit of an objectivist in that sense, going by Ayn Rand's idea. So there's some element of greed, but it's not just greed. There's also greed plus curiosity that, hey, can I crack this product, and will cracking that make me money? I was still naive at that time. So that idea was still there. And that was the driving force behind understanding. And also this whole idea of, I don't have to make money, or I can make money even when the market is going down, or even when market is not going anywhere. So options especially, opened those doors and got me a sense that, hey, there's a lot more that can be done with this product. And so most of my trading has largely been in options, futures, wherever it is. But options kind of, once you get into that, you're not going back to plain Jane equity, because you could do a lot more here. That grew over time. I mean, it wasn't liquid in India at that time, but over time it kind of got better and better.
That time you were doing a job, or was this your...
No, this was the time where I was teaching, actually. Okay. So I was teaching at a university and trying to figure out what to do. But I had a lot of time on my hand, and I also had people in terms of access to, because there were people who were teaching finance and so on. So if I had to ask something, I had many people around me to help me. Theoretically, they were not traders as such, but there was a point in time, but I think I knew, or practically speaking, I knew more than what they did. And that was the point where I said, I think I would want to make a career out of this rather than, teaching or whatever that is. So that was the transition point where I realized, okay, I think I know more than them, practically speaking at least. So
interesting.
Yeah, that was the transition.
But during that whole time, between 14 years or so, any big losses, failures,
many such losses as such, but then your base is small, so doesn't really matter. But losses were there in the sense, obviously, when you don't understand options or futures, you would lose money. I mean, when you don't understand leverage, you would lose money. So what you think essentially is, I'm buying an option for, let's say, 20 rupees, I'm just paying around 2,000 rupees. So what can go wrong? So while I did all that, so you do lose a lakh or two here, there, happens all through. And but yeah, I was still sane enough not to kind of lose money to an extent that I would lose all my savings or something like that. Nothing mad like that happened, but losses were always there.
Anything key, like there's a key moment that changes your outlook towards things, changes how you do things, makes you a better trader, a better, anything.
I was lucky not to have any such good or bad experiences. Okay, so there was a rather good experience because I was trading this new system which I had created, which is called a trend following system, where you kind of follow the trend of the index. And
so basically, if line goes up,
if the line goes up, you go long, and if the line goes down, you go short. And around this time, this whole thing happened. Nirmala Sitharaman's announcement of rate cut, corporate taxes cut. Okay. And I was long half an hour before that or something like that. Okay. And then I could capture a large part of that up move. And then that's when I realized, this is interesting. Though it doesn't mean I made a lot of money, but it got me curious. This works. This thing works, kind of a thing. you become curious in terms of how else could I have captured that up move which happened in the market. So in that sense, yes, but otherwise no such major things which completely derailed me or got me greedy.
So, of course, I mean, trading would have taught you a lot of things about, how to trade. But was there anything that you, read or, someone who you looked up to so that you could, understand the markets a little more deeper?
Krishna, the way one of the things which I both as someone who has worked in education, as well as someone who was trying to learn or understand a new space, what I could gather was in terms of content or in terms of, it's a very kind of disparate space. There is no one textbook that you could kind of go through and finish those 10 chapters and call yourself, okay, I think I have understood it.
But trading is probably the worst place to do that also.
Yeah, you can't do that. You can't do that. And there's so much happening, all related, but there is so much happening. So, and nuance again, because there are things which happen specifically in India may not be applicable in any other part of the world.
Right.
Because of the way the taxes are structured or because of the liquidity in the market and so on. So while conceptually you could get a lot of things, but there was no way you could learn without faffing. So you have to trade, you have to kind of lose money and then learn the process. That was the only way you could confidently learn. And then this was still a point in time where content on the internet was not as easily available.
And by folks, by content, we don't mean the garbage that you see a lot of people doing, but nuanced explanation of things, getting into things in a very deeper manner.
So that was not there. And that started happening, I think, 2016, 2017 onwards, a very recent phenomenon where, be it globally. So Tom Sosnoff, who, we interviewed, so he came in, I think, somewhere around 2014, 2015, he became popular on, YouTube. And that was one of the first sources of some relevant content, especially in trading and so on. So it was harder than what it is right now, but it's harder right now because there's overabundance of content. So you have to become very selective right now. At that point of time, there was nothing. You literally had to, there was no junk because very less junk, I would say. Okay. So there was no incentive for someone to create junk content. I look at it like that. So if there was someone,
market was small.
Yeah, market was small and all of that. So it was hard work. You had to be extremely curious and you had to kind of spend a lot of time and effort to get some basic stuff sorted.
But how was it like interviewing these people who you sort of learned from? Let's say Tom Sosnoff.
Oh, it was a dream come true because Tom especially was an idol, both because of options trading and because there's so much that I had learned from the content that he created. He was the first guy we got on the channel, on the podcast. So it was absolutely a dream come true. I would not have imagined even a year back that
you'll get
I would get to do that.
Did he meet your expectation? It's like never meet your heroes. Not to say that he was, maybe he was, but did he live up to that?
Absolutely.
Or, like all of them.
See, we only know part of them, right? As a viewer of his content, there's only so much that you would know about him.
Right.
So even as an interviewer or a podcaster, there's only so much that I get to interact with him. I wouldn't say that I know him in any sense, but then the little that I got to kind of interact with him, he pretty much fit in what I had, assumed in my mind. So not so sad to have met my hero.
Yeah, got it. So one more thing that you mentioned was, and people would already know that you're a systems trader.
Correct.
So in plain English, that's, let's say you write a logic and you trade according to that. You don't have to trade on your gut. You just follow whatever the logic says. That's correct. Now with AI or anything for that matter, as the technology evolves, what's your edge? Like if it's a logic, the system has to run. What is stopping me from copying your logic and trading the same thing?
When we look at, let's say, you spoke about systematic trading, so I would call it rules. So there are rules, and if something happens, we'll do this. If that happens, I'll do that, kind of a thing. Okay. So now with AI, what has become easy to a large extent is to get some sense of what rules work. Okay. But
what do you mean?
Okay. So for example, let's say if I take 10 years of Nifty data and dump it on Claude and say, tell me now at this point, I'm telling you, even before you kind of get to this point, not you need to know what you want to ask.
Yeah.
Okay, you can't just dump something and then leave it blank.
Give me
right?
millions.
Yeah, give me millions. That's not going to work. So it starts from there. What is the question that you're going to ask? And the more nuanced your ability to ask, you would get better answers. So in that sense, it's still a function of what you can get out of an LLM. That is one. But even then, there's a whole lot of difference in terms of getting a rule set. Let's say you engage with Claude and get some rule set, but converting that rule set into a tradable strategy has many more layers to it. Okay. So one is in terms of, let's say, fine, even if Claude tells you even after cost and all that, it still makes money worth trading. Now you need to figure out a way of trading that system. And when you are trading that system, you have to put your money online, you have to follow all the rules that happens. Making that transition and doing that consistently over years is a different competence altogether. So I can give you my trading strategy tomorrow right away, but I cannot guarantee that you would be able to trade it for years together for the edge to play out in your favor. Why? Is because one, you may not understand it fully. Two, you may not have the psychological ability to deal with all the volatility which would happen in that strategy, all of that. So rules is just a very small part of it, is what I would feel. So, I mean, just to kind of bring another thing which changed in my mind over all these years, close to 20 years, I always was a very rational, rules-based kind of a person. I continue to be, and that's why my focus on systematic trading. But over years, I've realized that some of the biggest guys who make money, they're not 100% rules-based. There is a fair bit of discretion. And this was always, something which would bother me. But recently, when I did this podcast with Jack Schwager, so I asked him this question. I said, he has interviewed hundreds of people. He has published 80 odd interviews, but interviewed double that. So I asked him, you interviewed the best of 100 odd people, 100 plus people
in the entire world.
Yeah, in the entire world. If I have to ask you, were they systematic or were they discretionary? He says 80 to 90% were discretionary. Now, discretion doesn't mean that you do random shit.
What is discretionary?
Discretionary means, so in a broader level, you take a call on when to go long or when to go short or whatever you want
That's
to do.
my ability, that's my gut telling me.
It's not necessarily your gut. You may be using a set of rules behind to get some idea. But at the same time, the application of that, you don't blindly go along just because
the system says that.
You don't blindly take a call, but you may be using the assistance of systems.
Just because a backtest results in something, doesn't mean.
Quant would, or a fully systematic trader would just say, even if you know that tomorrow, let's say Trump is going to announce something, there is a possibility of, let's say, markets crashing, and the system says go long. Ideally speaking, a systematic trader would go long. That's all. Wouldn't really bother because that Trump event was never a part of the backtest anyway.
Right, exactly.
So why should I even care? So that's not how a discretionary trader or investor would think. They would bring in some context and all that. So that's what he was trying to say, that he hasn't seen, any 100% systematic folks.
You are also not 100%.
I am 100%, and I now realize the downside of it.
Why do you say so? Realize now the downside of it?
After having spent time in the markets, you develop an intuitive sense of what could happen. And your intuition is saying that, hey, this may not work. But on the other part of your mind is like, you are a systematic trader, you just blindly follow the trade. So there is a clash between this intuition, which is not like a random intuition, it is now over years, and the system which I myself have created.
Right.
So that clash is something which happens more today than, let's say, 5 years back, or because now, I have a better sense of the markets. Yeah. So that is what I think they are also trying to say.
Got it. My next question was about, does AI make you a good trader or a bad trader?
Yeah. So my answer to that is, AI is a great assistant, and it's still a function of what you can get out of that assistant.
Yeah.
AI can just spew some crazy stuff, and if you don't have it in you to kind of evaluate if you don't have a sense of the space. This is what Karthik Shashidhar was also saying the other day when we talked to him about AI. He said if you know the space, only then you'll be able to evaluate the output of an LLM.
Fair. Like if you have the understanding of the space, only then you can point out, oh, it's wrong, oh, it's right.
But as a self learner, I'm just trying to change track here. I also learn a lot by engaging with LLMs. So, for example, if there's a specific concept which I can't understand, I ask AI in 10 different forms, and it explains to me in 10 different forms. So, but I should be curious enough to ask those 10 questions, and that has changed my life.
My go-to has become explain in plain English. It'll explain me. I'll point out whatever I see. Oh, that doesn't add up. I ask it. That's my go-to.
Yeah, exactly. So I would ask a question to Claude, and I would ask it saying that, explain it to me like a 5-year-old or whatever those things. And then in that explanation, there could be a line or two which I did not understand. There could be a sub-concept which I did not understand. Then I would highlight that and just reply to it and say, okay, this is the part. Can you kind of double click on this and explain that part to me? And then you can go on forever.
Right.
So I've gone on crazy rabbit holes using Claude or ChatGPT.
What was your last one?
No, I was it was not really trading specific.
That's okay.
I was just trying to understand where does the word stock come from in the stock markets.
Where does it come from?
I think stock was a generic term used for trading, especially. So let's say when you go back to trading of goods. So essentially, when this whole the great era where trade was happening between Europe and India and other places, so there were ships being sent across, and so there was stuff which was being spices and all that which was moving around. So that spice is the stock. So overall, then what happened was because of these joint stock companies came in to finance all these ships which were traveling, and that's where the term joint stock company came in, and then the shares of individual holders. Shareholders were traded on a stock exchange. But it's actually
secondary market became
primary. So in a way, but it was still called a stock exchange. But the stock is not being traded. It is actually, I think, the shares being traded. So I like the Indian version, which is share market. Share bazaar or whatever it is. So I like that more. I think that's more specific and correct.
By the way, I mean, you already answered that you got into stock market or share bazaar for that matter because a friend told you. But when was the first time you came across the word or the universe that exists called stock market?
I think this was somewhere around Harshad Mehta era. 1990. So I would have been in my early teens, and this was all over. And those days there were newspapers, so I would still open the newspaper, and every other day, I think practically you would see this man's face somewhere on the main pages. So I would have asked my father, what is this and can you tell me? So not that he was an expert, but he did give me some idea of there is something called a market where these shares are traded and this guy has done something. That was my introduction to the idea of a stock market because of the scam which was going on. But I did not have any sense of the scam or what a stock market is.
No, of course, but that was your first brush with...
first brush with this concept.
Now that we've all had this whole discussion about you entering the market and you changing your way of things. If someone is entering today, let's say, what would you tell them? Also, one more thing parallelly here, the day you entered the markets, the thought process on that day and today must be widely different.
See, markets have evolved a lot because of the number of products which are available to trade and the general maturity in those products. So that there's a huge difference. So 15 years back, 20 years back, when someone spoke about trading, it was essentially not even derivatives. We are just talking about buying some stock and assuming that it would go up and selling it and making money. That was how much the understanding was.
Right.
But then with derivatives coming in, with liquidity in derivatives coming in, with indexes coming in, with index derivatives, which are like so liquid, I mean, Nifty especially coming in, and then all the content around it, both which comes from brokers like us and otherwise outside, is the world is completely different in that sense. So the base with which someone starts today is very different from the base with which someone started 20 years back, which is fine. But there are certain things which have not changed yet. I think so. Human greed has not changed. I think the 20-year-old today, the Gen Z today is perhaps who is looking at markets is as greedy as I was when I was in my 20s.
Greed never goes away.
Greed never goes away. That's so human, right? I mean, there's a good side to it as well. That has not gone. And the ability to understand the whole cycle of a market by being in the markets for a decade, that cannot come to you unless you have spent that kind of time. So if someone was starting today, I would say they are lucky, and they need to recognize the fact that they have access to information, they have access to this beautiful tool called AI or LLM through which they can engage and learn. But at the end of it, there'll be limitations. There's only so much that you can learn by reading. So there still has to be the doing part, which I don't think has changed yet. As much as I learned from doing, even today you have to do it to learn, and you have to close that loop.
Right.
So that is one. So you have
whether
to
or not you take up trading.
Whether or not you take up trading as a profession or whatever, you can't really sit back and say, okay, I think I've got a sense of it. So you would have to do it, and then you get a different dimension of learning, and then you kind of repeat that cycle of reading and doing in a way that you don't really harm your capital to an extent that you don't have anything left to come back to. So those things haven't changed. If there's anything else, I would say start small. And yeah, so it may sound controversial, but let me say that I haven't seen anyone making generational wealth through markets yet. Okay, so I don't know anyone around me by trading or investing, both. But I have seen people making generational wealth who started businesses or who've done something else. So, but not through trading or investing, or not through trading or investing at an individual level. That's what I mean. So you could start a firm which is in the business of trading and investing. So you could start a mutual fund, you could start an AIF and all that. So even then, I have friends who have done all, even they have not made generational wealth. Okay. So if you are thinking that you're going to make generational wealth by, trading, sitting in your bedroom in your shorts, and using your savings.
That's the lure always.
Yeah. So that's what we all want, right? At the end, if you have those little bit of savings, and if I could make money out of it, why not? So somehow, as enticing that idea is, it's fairly futile. So that's something which I want to reiterate again if someone is watching. Yeah.
Fair. Just one more last thing. Is there any video on any topic that you have in mind that you want to make about, but you haven't? Maybe because for various reasons.
It is exactly on this. So I would make probably 10 videos on the fact that, why and who should trade. So that is very, very important. I mean, someone may ask me, okay, if you can't make money, then why do you even do it? This is where you need a bit of a nuance in terms of you can make money, but there are limits to how much you can make money, and you need money to make money. So if you are starting with 10 lakhs, there's only 3% would only mean 30,000 rupees.
Yeah.
Okay. So, but the base also matters. And this is where a lot of people go wrong. They somehow don't understand this math at a very basic level, that you need money to make money. So the larger the base that you have, the better it would be for you. And that takes time to sink in.
So, I mean, we've discussed a bunch of things so far, but one more thing that this is a selfish reason also I wanted to ask, how do you really go about researching these videos? So for anyone who has seen me, I have appeared on Markets by Zerodha. I take care of Daily Brief and a bunch of other things. We have a fairly set process there. It's far more easier, I feel, compared to you, because there's a story, then you read up, then you write. But how is the process for you?
I think it's similar. And coming from a research background, one of the things which happen is, and I'm also engaged with the markets on a day-to-day basis. There's a community I would be a part of, and there are friends, and there is social media. So there's always continuous engagement with the markets. And markets by nature is not a static entity, right? There's something happening.
Right.
So that's the the luckier part, in the sense we are dealing with something. We're dealing with an animal which changes shape every minute. So there's a lot ideas which keep coming in. So that is there. And, I and a couple of my team members, we maintain a roster of ideas. And those ideas are bucketed in the sense, okay, so for this can be done in this episode, or, some buckets are there. So we keep kind of pushing it there. And then once a month, we will sit through and see.
And look at the list.
Look at the list and what are we going to do this month. Some of them require extensive back tests and data. They require more time than others. So then they go to the person who would do the research and all that. So there is a data work which has to be done, and it'll go and they'll do the work and come
Right.
back.
Right.
And then there are others which don't require that kind of data, but they do require research. Let's say I figure out and I come up with a topic. For example, today, I was researching about this whole Monte Carlo thing. which I
You were
told you.
telling me.
Yeah. So I would research about, what is this whole thing, what papers have been written about it, or I generally look for, there are certain kinds of papers, which paint the landscape for you.
Right.
So
Give you an overview of
give me an
sorts.
overview of the space. So I look for those papers, and they do some job for me. And once that's done, then it's my job to kind of simplify it and put it in a context. Use examples which are relatable to our audience, our markets, and so on. And that takes anywhere between 2 to 3 days
Right.
of effort. And then you put the script together, and I'm here to shoot after that. So, but yeah, effort and research which is very fluid. I'm sure you would also have experienced that.
It's all
So you would want 5 days to prepare for one daily brief, but it doesn't happen.
Doesn't
so,
happen, yeah.
So yeah, you just go with some point. You have to call it a line and say, okay, beyond this, I'm not going to,
Yeah. There's
go
a plug
for
you
the-
have to pull.
Yeah, you have to pull that plug, and then I shoot. So that's a good thing about having a deadline as well. Otherwise, there's no end to this whole,
Right.
nothing
would go out.
Yeah, it can. Yeah, nothing would go out. You keep researching then. So yeah, that's pretty much.
But a
what the
fair bit
process
of
is.
it, I mean, you already mentioned, is because you look at the markets every day.
Yeah, and
If you see through things, you have a sense of what
you need
is
that
happening.
curiosity. Oh, this is happening right now. This is a good time to talk about it. Or someone would have mentioned something on Twitter or Instagram or anywhere. Or sometimes, someone would have explained the concept in the wrong way. So then you get, riled up that, hey, shit, this is not what it is. So I must make a video on it. So it could be any of this. Or sometimes randomly, family members or some friends ask you questions. Then you realize, oh, if they have asked the question, which means this is not something, because
Known by.
Yeah,
Yeah,
so-
you get a tunnel vision of sorts.
Yeah, so we have that curse of knowledge. So we think that the world understands what we,
talking about.
what we understand, but that's not the case at all.
Fair. Thank you for doing this.
Pleasure.
And thank you everyone who has, kind of supported this channel. I mean, Sandeep is the one who's, taking care of it. But thank you for watching us, listening to us.